And so you can take that token, deposit it into our smart contract, and our smart contract basically locks it. So, and
Wow.
it mints an S token. And that S BUIDL doesn't, it's not a wrapper of the security. It doesn't provide the holder of the S token any rights or recourse to the actual security. But what it does is it's sort of a technical guarantee that this security is unencumberable.
This content is brought to you by BitGo, which is one of the top crypto custodians in the crypto industry. BitGo works with many big companies and brands, such as Pantera Capital, Bitstamp, and Bitcoin IRA. Nike also selected BitGo to power its wallets for its NFTs. And BitGo has many great services, such as hot wallets, custodial wallets, self-managed cold wallets, and NFT wallets. Many institutions trust BitGo with its top-level security and incredible services, such as being able to deploy your capital while it's in custody, which includes lending, borrowing, trading, staking, DeFi access, and more. If you'd like to learn more about BitGo, please visit bitgo.com, link in the description. Welcome into the Thinking Crypto podcast. I'm your host, Tony Edward, and my guest today is Reid Simon, who's the head of DeFi and credit solutions at Securitize. Reid, great to have you on.
Likewise. Thanks for having me, Tony.
Reid, as we were discussing before the recording, I've followed Securitize for many years. I've interviewed Carlos Domingo, Jamie Finn, and I'm excited to be speaking with you today because there's been some new updates and some very big news around Securitize. And we're going to get into all the details, but tell us a bit about yourself, where you're from, and what's your professional background.
Sure. So, originally from New York. My background has been a weird amalgam of kind of finance, tech, and crypto. I spent the last 6 years at blockchain.com building their credit business, built credit products at Uber, was a banker in a former life. But now I kind of get to sit in between all of these exciting elements and bring in some of the TradFi background and help try to figure out ways for securities that we issue at Securitize to be able to interact with DeFi the way it operates today.
Mm. And what was your first encounter with Bitcoin or crypto? What was your aha moment?
Uh, well, so they were different. So my first experience with Bitcoin was in 2011. I needed access to, or I wanted access to a news group, and that kind of was what opened my eyes. And then I kind of forgot about it for about a year, and was actually in Argentina. And I guess this was during the last term of Kirchner, and dollars were just you would change them, and I was curious, why different notes were getting different rates, and found out the 500 euro note was the one that got the best exchange rate, and was talking with people, and they were like, oh, but Bitcoin actually gets an even higher rate. And then it was like everything clicked. And being on the ground, I was living there doing a study abroad, and just seeing two forced evaluations, and kind of just the everyone was changing pesos for dollars. That was really my aha moment, where I was like, oh my God, this actually exists in the real world and is solving like a real critical problem.
Mm. And your background, you mentioned in banking, you were at Credit Suisse and then you were in Uber, and now you're in crypto. Do you see crypto being that evolution of the banking finance industry? But in addition, Uber maybe can be considered Web 2 and it eventually has to merge over to Web 3.
Absolutely. I mean, I think back on a lot of the frustrations of kind of how, banking operates. Even if it's just these legacy systems built on top of other legacy systems that don't communicate with each other, and the walled gardens and inefficiencies, and absolutely. If you think about, industries that haven't been revolutionized by technology, even sort of in a Web 2, function, finance is certainly one of those. And yeah, I would say, part of the reason I joined Securitize is because you have so much excitement and innovation in kind of the crypto world, but you still have the realities of like the deepest capital markets and the investor protections of kind of securities regulations. And we see these two worlds kind of merging together. And I see securitizing at exactly kind of the nexus of those two.
Do you think we might see Uber and this is a hard question, integrate blockchain? And it's funny that I remember years ago, SEC Chair Gary Gensler, who's on his way out, he said you could build Uber on top of Algorand, the Algorand blockchain, which is,
Well, is
fascinating.
that a security?
Yeah. But it's funny because I think he has a point though, right? That you can have blockchain integrated into these Web2 companies, helping them to move to Web3, and then maybe better digital identity and verification and faster transaction speeds with stablecoins and things like that.
Yeah, so I mean, actually, while I was at Uber, there was a crypto project that was being explored, but it was more so on the payment side. And I think you kind of see some similar corollaries for like what PayPal is doing with PYUSD and kind of using that stablecoin as a means for internal treasury efficiency. And so for at Uber, it was more so around like payment processing fees and being able to move money more quickly to drivers in kind of an internal system. So for sure. But I mean, I guess, could Uber be run on a blockchain? I mean, I don't know about the scale and kind of the transaction speed element of trips and all of the kind of other data that would need to be processed. But ostensibly, yeah. But I guess it comes to that big question, which is like, does everything need to be run on a blockchain or should everything be tokenized? And I guess, I would probably say no. But I think cases like identity and trips, a lot of, I think there's kind of sub elements of their business model that are certainly beneficial to have some type of distributed ledger supported.
Yeah, absolutely. And maybe it's a hybrid model that we might see some of these companies do where not everything in their business is running on the blockchain, but certain aspects, like you mentioned. And maybe it's just simply using stable coins for faster transaction and settlement and on the back end or whatever it may be. But we'll have to see how these things evolve. Now,
Absolutely.
for those who may not have heard of Securitize, can you give a quick overview of what you guys do?
Sure. So Securitize is sort of one of the OG tokenization platforms. Historically, we've had a very regulated footprint, and we really haven't been a crypto company. So we have a transfer agent, we have a broker-dealer license, we have an ATS license, and we have an investment advisor. So kind of all of the core regulatory structures to enable the issuance, sale, and trading of digital securities. And that's really kind of formed the basis of the company. So our goal was to go out to top tier asset managers, tokenize their private assets, and then be able to distribute them on chain to investors in smaller ticket sizes, and then be able to provide users the opportunity to not just hold an asset in their Morgan Stanley bank account or another kind of internal ledger, but be able to bring those assets on chain and find ways to unlock all of the great composability and utility that crypto and on chain activity entails.
And of course, the biggest news that I think most people are familiar with is you guys working with BlackRock to launch BUIDL, their tokenized fund. And that has been growing significantly. I think early this year I read it went over $500 million. It might be higher now.
Yeah, yeah. So I mean, if you would have said that I would have, left a proper crypto company to move to work on a money market fund, I would have told you that you were crazy. Like, who would have thought at that time that these products would have such great uptake? But if you think about like people have repeated this, but like the best product market fit in crypto is stablecoins, right? And if you think about, the proportion of dollars in the US financial system versus kind of the treasuries that ultimately back those dollars, it's like 10 to 1, treasuries to dollars. And then you look at our universe of on-chain dynamics, and it's a total opposite. I mean, I think we have maybe 2 billion of treasury products on chain, and then something like 170 billion of stable coins. So there really has been this great uptake, not only just amongst institutional investors, but also retail for a whole host of products, where users are actually getting yield from the treasuries instead of kind of the traditional stablecoin providers keeping it for themselves.
Mm. Now let's talk about sTokens. Tell us what this is and what are the benefits and functionality of it.
Yeah. So, if you think about real world assets, you've kind of got two different categories of that, right? You've got real world assets that are securities and are regulated and have kind of a regulatory obligation to fulfill. And then you've got kind of a whole host of, some might be securities, some are definitely not securities. And so for us, all the assets that we issue are securities. And S tokens are really kind of the technical implementation to help break down some of the friction points that really make it difficult for securities to interact with DeFi the way DeFi operates today.
Mm.
Um, so the securities that we issue, they're permissioned. So they can only go to certain addresses that have been KYC'd, but it's not just KYC. They have to maintain certain ownership records for how many holders exist in certain jurisdictions. But even more than that, can a security sit in a smart contract? Can someone earn LP fees off of a security? Is that a broker-dealer fee? So there's just really a whole host of kind of regulatory and legal friction points for securities on chain. And so our S tokens are a means to kind of responsibly and compliantly be able to allow securities to interact with DeFi the way that, you or I would go onto whatever platform and do whatever we like.
Mm. So just so I break it down for the audience, so let's say we tokenize, or let's use the BUIDL example, right? Are the tokenized shares of BUIDL S tokens, or S tokens exist outside of the BUIDL shares? How
Sure.
does that work?
So think about it this way: like, aside from some of the KYC elements, like a security, the defining feature of a security is really that it has some stable value component, a variable return, and then maybe some forward stream of distributions, right? But it's really kind of that variable return or the forward distributions that make that asset actually become a security, right? So if you kind of think about the parts that make up a security, our S token vaults allow you to extract the stable value component and use that in a permissionless fashion to be able to be a collateral asset.
Mm.
So, and that's kind of like, if you think about it from a high level view, but I think more kind of tactically as it relates to BUIDL, BUIDL itself is a stable NAV fund. So the token is always priced at 1, and you receive your interest as distributions, right? And so you can take that token, deposit it into our smart contract, and our smart contract basically locks it. So,
Wow.
and it mints an S token. And that S BUIDL it's not a wrapper of the security. It doesn't provide the holder of the S token any rights or recourse to the actual security. But what it does is it's sort of a technical guarantee that this security is unencumberable. So you can't borrow against it. Someone else can't use it. And that token then provides the holder sort of like comfort that that dollar actually exists. And if I do liquidate the S token, I'm going to be able to receive, I'm going to be made money good. And what's interesting about this is, again, because BUIDL is permissioned, not anyone can just buy it, right?
Right.
Not anyone can hold it, even if someone were to default on it because it's permissioned. But what we're able to do with our vault is essentially keep the securities flows between whitelisted users and then have stablecoins or S tokens flow between kind of the non KYC'd or non-permissioned addresses. And part of that is enabled through Circle's atomic liquidity contract,
Mhm.
where when the S token comes back to our contract, there's four internal transactions. It burns the S token, it unlocks the security, it redeems the security with Circle, and then we forward the USDC to the redepositing address. So it's really one of these kind of like technical and legal implementations that unlocks a lot of utility for holders of BUIDL.
Mm. And I noticed you guys are working with Elixir on this. I remember speaking to I think it was sometime this year. Is it with regards to their setup, which protocols can this be used on as far as DeFi protocols?
So our focus at Securitize, like I said, our regulated footprint is really focused on issuing assets from the highest quality asset managers. And then if you think about our credit entities, which issue S tokens, we're kind of one step over, right? So we kind of unlock that intermediate utility, and then we look to partner with other providers who can deliver kind of the last mile of utility in DeFi. So with respect to Elixir, they read the code, they get comfortable with the code, and they look at BlackRock or Hamilton Lane or some of the other products that will issue, and they say, okay, we think that this is money good to be able to lend against. And that's really kind of the core unlock here is then users who have BUIDL can mint sBUIDL, they can mint DUSD, and then DUSD is a stable coin that Elixir issues. And it's permissionless and all over. So it really allows users the ability to retain their interests on their security, but then, you know, undertake activities that kind of fit in their risk spectrum. So some people may want to go quite out on the edge and do some really esoteric things, or some of them may just want to LP into a stablecoin pool that has no impermanent loss. It really is about allowing users to use base assets that are high quality, and then kind of choose how they want to interact with crypto to fit their risk profile.
Interesting. So, and you mentioned this is only for accredited investors. Are you seeing like hedge funds, family offices, and so forth using the type of service?
Yeah, so it's interesting, right? Like when BUIDL was launched, yields were about 5%. We hadn't really seen this uplift in Bitcoin prices, and so interest rates on chain were, I don't know, around 4, 5, 6%.
Mm.
And so it was a comparable yield, but still not super attractive given kind of all of the permissioning and kind of reduced utility of the security. And now you see yields, north of 26%, 27% on just
Right.
just the basis trade, right? Which is a delta neutral strategy that, other than the platform or counterparty risk, doesn't have a price impact. And so now, if you look at being able to use BUIDL as as kind of that base asset through sBUIDL and DUSD, you're now able to access those yields while still doing so with your BUIDL. So in some cases, you could argue that it's actually because you can't really do the basis trade with a yield bearing asset at that scale. It's kind of it really is kind of one of the best use cases for being able to capture basis right now.
Mm. And we're using BUIDL as an example. Are there other tokenization of real world assets examples that you can share?
So in terms of like scope, for instance.
Yeah, or if there are any other existing ones, or if there's others on the roadmap that you're planning to enable this for.
Yeah. So our view is like, and I've said this a couple times, is like we kind of deal in boring products, but we want those boring products, and we think they're interesting because they're super high quality, and we make them base assets, so people can in crypto can then kind of build on top of them and do more interesting things. So our focus has been on kind of private assets. You could take BUIDL as an example, which is treasuries. There's basically no risk in the US government defaulting on these. And then you can kind of move down the risk spectrum.
Hmm.
So we have Hamilton Lane, their senior credit fund, which is a credit fund that only invests in senior secured loans to corporations. There's There'll be another credit fund that's coming out from another top tier investment manager. We've got a KKR healthcare fund, but really private assets by high quality issuers that have been in the business for literally hundreds of years, manage trillions of dollars, and have really kind of you know really have a focus on the expertise that Wall Street has in making investments and managing those investments, and really being able to take the best elements of that world and kind of merge them with the best elements of being able to the user experience and the opportunities for transacting on chain.
So on that note, what do you think might be the phase two of RWA tokenization, given that we got money market funds and things like that? What do you think might be the next, if I'm phrasing this right, the next product that is tokenized, so to speak?
So I don't know. I don't know what the next product to be tokenized will be, but I think kind of the phase two that I'm excited for is more so around the way that that DeFi looks at real world assets. And so what I mean by this is all of DeFi, whether it's Aave or pick your CDP platform, everyone has been focused on kind of point in time liquidity. And liquidity is something that Bitcoin has arguably some of the best liquidity across really any asset, maybe aside from treasuries, but at least that trades. Um, and so it's been this point in time. So like the moment Bitcoin drops below X, there's a forced arbitrage, someone comes in and liquidates. But if you look at some of these private assets that we've mentioned, the volatility of their underlying investments is really quite low. And even so, in the case that most of them only get marked once a month, because there's not that much fluctuation in between the month. So I think as we get some more of these assets that have composability and interoperability with DeFi, I think we're going to start to see DeFi protocols that take a different view on liquidity, which is okay, if this fund has, it's issued by a manager who the firm has been around for 100 years. They manage about $1 trillion. The thing returns maybe 10% a year. These type of funds don't fall 50% overnight. And so thinking about what's the liquidity of a fund like that, and maybe it's only 50 cents, but looking at it kind of a more expanded view of an asset for its quality rather than just kind of the point in time, okay, you're done, let's move on.
Hmm. Do you think it makes sense that eventually ETFs might be tokenized, like Bitcoin ETFs or a basket ETF with crypto assets? If Bitcoin's going to become this strategic reserve asset and so forth used by different governments.
I mean, so will ETFs be tokenized? Is that what you're saying?
Yeah, and maybe Bitcoin obviously already on chain, easily accessible and so forth. But do you think some of the institutional investors or credit investors may want to get access to not Bitcoin directly, but through an ETF, maybe BlackRock's version, IBIT. Does that make sense? And I don't know. I'm asking as like a
Yeah,
newbie.
yeah.
Yeah.
Yeah, so I think it's interesting. I mean, I hold IBIT, I hold some, ETH. I think it really depends on like the investor, right? I think part of the reason that crypto has had such great success is because the user experience is a better one. And so to the question around ETFs, like I would 100% love to hold in an actual S&P 500 tokenized form because of all of the composability and the ability to lever it and move it, and really manage assets in one place instead of needing to move it on chain or off chain, right?
Mm,
And so I think there's like this push pull of crypto people would like to get some more legitimate cash flow business assets on chain, to be able to manage their portfolio that way. But then you've also seen kind of the inverse, right? Which is RIAs and companies who have boards feel more comfortable owning securities. And if you can do that with on chain assets existing in a security form, I mean, case in point, we've seen with the great success of the ETFs that like there is demand. So I think while as these two worlds converge together, it's not really because it's only one way. I think there is actually opportunity for both off chain and on chain to have kind of opposite interest in moving the other way.
mm. Now, you mentioned that this product is permissioned. How are you vetting the different participants, and is it a global market or is it just US based?
So BUIDL is a security. So it's issued out of a BVI fund. So it is available globally to qualified purchasers, which is a pretty high barrier,
Mm,
which is basically 5 million of investable liquid assets. So it is purely an institutional product. But again, it's really focused on being a base asset. So if you look at and see some of the ways that it's being used today, it's really to form the backing of DAOs. It's being used to form some of the backing for other stable coins or stablecoin wrappers, or we've seen option strategies kind of collateralized with BUIDL. We have some interesting use cases coming up where market makers are willing to basically allow BUIDL to be collateral for open trading positions. So if you look at like, basis, we love to talk about when it's when the market is pumping like it is, but right now, if you were to put on basis, you'd have to do it with a stable coin or cash, right? So a non-yield bearing instrument. But we're seeing trading firms that are saying, actually, you know what? Like I have this total return swap on, like, why don't I just collateralize it with BUIDL and now I've got, the incremental yield on top of that. So I think, with new things in a world that's so used to just put it out there, let it go, whatever, and see what happens, things will move slowly. But we're seeing a lot more use cases start to get built out as exchanges are more willing to accept it as collateral. Market makers are starting to, quote other coins against it. And we'll see, greater adoption. And ultimately, hopefully, through our sTokens, we'll get the DeFi world a bit more connected, and people will realize don't do things with stablecoins. You can do them with BUIDL.
mm. So I know the question is going to come up because we've seen exploits and hacks and DeFi and so forth. And I know version 1.0 of anything is not perfect and there's need for further iterations. So talk to us a bit about security and how obviously you mentioned it's permission, so it's not like open to everybody, but at the same time, how are you guys approaching security?
Yeah, so a couple comments there. One, I think is, a lot of people, especially from the crypto native side, like to kind of riff on, securities and the friction that they provide. But there is, one interesting element of a security is that if it's stolen, whether it's a digital security or a security, it actually can be reissued.
Mm,
So assets like, certainly Bitcoin and Ethereum, if it's stolen and a hack, it's gone, right? Um, if BUIDL is hacked or stolen, we actually have the legal ability through our transfer agent, if there's demonstrable evidence that that's occurred, to be able to burn that token and reissue it. So,
mm,
in some cases, you can kind of argue that unless you're a very large player in the Tether or Circle world, um, convincing them to burn and reissue stablecoins is often a tall order. That is kind of a built-in feature for all of the securities that we issue.
So I know BUIDL initially was launched on Ethereum, and I think there's expansion to other blockchains. Uh, with regards to the S tokens and so forth, is it all primarily based on Ethereum?
No, actually, so I think we've signed seven integration agreements. I don't know which ones are public, so I'll just point you to probably DeFi Llama to check that out.
Mm.
But yeah, so this is again, we are chain agnostic, we are asset manager agnostic. We view ourselves more as kind of an infrastructure provider, both on the security side and also on kind of this S token concept. Um, and so, yes, those vaults are live today on Polygon, AVAX, and Ethereum, and they'll follow for the rest of the assets that are issued or will be issued in the future, and will be available on all of our partners' chains.
Mm. Question about, and I think you may have answered this earlier about the burning feature. So let's say a blockchain, for whatever reason, you know, not everything is going to be a winner, and not there's not going to be a million blockchains out there. But let's say some of them that are being issued on, they start to fail, and those blockchains and those projects start to die. What happens to the respective tokenized shares or tokens that are on those respective blockchains?
Sure. So there's a process of, I don't know how many chains there are out there, but there's seven that we're integrated with, and that is a very small minority of chains. So there is a lot of diligence that goes into the sustainability, the security, and kind of the growth potential for the partners that we have integrated with. And the issuer sometimes also has the ability to say, we don't want to go onto this chain, or, we only want to be on this chain, right? So there's a lot of diligence that's done on our part as transfer agent and broker dealer, but then also the issuer as well. So, but it is important to remember that these are securities, whether they're natively issued like BUIDL is, meaning that there is no other way to own the BUIDL fund than the token, or Scope, for instance, which exists in a master fund but has, I think, a $200,000 minimum investment. Regardless of the form, it still is a security. So if the blockchain were to fail, there still is a legal obligation that you are the owner of that security, regardless of whether the blockchain is operational or not, and you have a legal entitlement to your shares. And so there is not a risk from that perspective in terms of we woke up tomorrow and XYZ chain just wasn't producing blocks. It doesn't mean that you're not getting your security or it's lost. There, our we call it the DS protocol, is basically our infrastructure layer that indexes on-chain activity and then converts it back into the binary data that were required for regulatory purposes. And so it's really that regulatory master security file that's the ultimate record for what's happening.
Back in 2023, Larry Fink said the future of finance is tokenization, or he said tokenization is the future of finance. Get the quote right. Um, so with tokenized assets and Wall Street and TradFi being able to access this and participate and build on these different blockchains, and you guys are helping to facilitate this, and then you add the DeFi component, do you see the future of the markets running this way? Truly global market, 24/7 trading, no opening and closing bell, no more holidays, but you got securities and different maybe commodities and these things tokenized, and folks can easily do any type of transaction via DeFi.
Yeah, I mean, even if you look at kind of the evolution of, trading products from, how did you manage your portfolio of needing to buy individual stocks and then kind of readjust those. And then you look to like the efficiencies that mutual funds brought, right? And then ETFs and the huge expansion again because people enjoy the experience. It's easier. There's some tax advantages, but we still have this core friction even in TradFi between the rails that move dollars and securities, right? Or commodities or whatever else, right? I mean, I just tried to move some equities from one of my brokerage's account to another one, and it took a week. I had 3 phone calls. Like you would think these things would be easy, and that's just moving a security, right? But ultimately, what the blockchain provides, and I think it is the natural evolution that Larry does talk about, is being able to have cash and assets on the same ledger. And that's a huge unlock. It's probably it my cynical view would be it is certainly not good news to banks and intermediaries who make a lot of money on delaying your wires and settlement of funds. But I very much do. I very much do. Firstly, because it is a better user experience, and it's less error prone. And those two things are quite important when you look at kind of the scale and real dollars associated with those markets. And I think fortunately, the asset managers like BlackRock have had a lot more flexibility in kind of the way they're regulated versus banks, at least in this last administration. So I think that's been great news, and hopefully some of the other guidance from OCC and some of the other regulatory agencies will start to open this up, where banks will also start to participate and not just have their internal ledger operate on a blockchain, but be able to use distributed versions.
Yeah, that makes sense. And as you were saying that, I was thinking about a question that came to mind was why is BlackRock the leader in tokenization right now as far as TradFi and ETFs? And I realized that the the duh question or answer was, well, they're not a bank. They're just an asset manager. Because I was wondering why is J.P. Morgan or Goldman Sachs not the leaders here? And then later on we heard about Sob 121. These banks actually can't custody crypto and touch it directly, even though they may have some trading desks and do some different things with futures and so forth. So it's interesting. So you think that, as we head into the new year and regulations come in, and get more clarity, a more favorable environment, these banks will jump in?
Yeah, I mean, even back in my blockchain days when we would talk with banks, and Silvergate had a facility where it was over collateralized. You could borrow against Bitcoin, and there were other banks as well that kind of ran that through their commodity division and had a side pool. But ultimately, I think the big unlock, or rather blocker, has been the OCC guidance on banks doing anything with public blockchains, and that has kind of forced them into kind of the Onyx model of, okay, this is a private blockchain and we're clearing our own transactions. I don't think there's a ton of utility for why have a blockchain if it's essentially your Excel? It's the same. It's the same kind of dynamic there, especially as it relates to interoperability. And for me, that's kind of the really exciting thing for me about crypto is the ability for someone to spin up a project tomorrow and iterate at scale, and see where things go versus kind of the legacy traditional model, which is, all right, you have to go raise a bunch of capital, convince a bunch of people, and the scale of iteration, or rather the frequency of iteration, can really only be achieved once you have scale.
Yeah, great point. So what's on your roadmap for, I know 2024 is wrapping up, but anything you want to share for 2025?
Sure. So, phase one of sTokens is underway. We launched about 3 weeks ago. We have started to crawl before we walk, and certainly before we run. And we'll start to open up a bunch more features, both on the assets that are supported, the platforms where you can use S tokens, as well as the assets that you can mint with S tokens. So I think the first next step for us, as it relates to S tokens, will be self mint. Where any holder of BUIDL can mint their own S tokens. And as we add kind of more venues that will accept them for different use cases, whether it's collateral as an asset on a DEX, whether it's a CDP platform to borrow whatever other asset you would like. We'll start to add more functionality there, and that's quite a big lift for us, at least, for the first kind of expansion phase. And then the phase that will follow from that will be support for variable NAV assets. So if you think about BUIDL, it's stable value, so it's $1, right? And when we talked at kind of the beginning of the show, we said there's this stable value component, and for a stable value security, that's one, right? And if you look at like a scope, which is variable yield, the price appreciates or declines based on the performance of the underlying investments. So for that, the vaults need to be shifted a little bit to accommodate that. But that I think is a really exciting unlock, because I think it has a lot more utility for leverage and composability, in a way that even in traditional markets, if I own $10 million of, I don't know, pick XYZ credit fund, and or maybe not credit fund, let's say something just a little less liquid, like a private equity fund, right? And even if I'm in maybe year 4 of that, there's not a bank that's going to go and do the diligence to underwrite and advance against a small position like that. But one of the great things about DeFi, or kind of crypto writ large, is it's not that asked to lend against that private equity, illiquid private equity fund. It's not a one-off, right? Like, because it's atomized and there's a bunch of people with this, with these shares, you can really aggregate it into an underwritable asset that then becomes interesting, rather than kind of like needing to go find who owns these and see if there's a consortium to put together. So those are the two things that I'm most excited for. Is one is self mint, and two is support for variable NAV securities.
Oh, that's awesome. Very exciting stuff. I got some wrap-up questions here for you.
Sure.
First, if you could create your own metaverse, what would the theme be?
Ooh, my own metaverse. Metaverse.
Or would you put your Oculus or Apple Pro glasses on and go to?
So I will admit that I broke down and I did buy a Vision Pro, and I will say, like, it is not an ad for Apple, but the quality is quite fantastic. But I think one of the cool things that I enjoy skiing. So it'd probably be something around like really difficult to access ski ski ranges.
Hmm. Rapid fire questions. Favorite food?
Favorite food? I'm gonna have to go with steak. There actually no, it's eggs. It's 100% eggs. I eggs there's so many ways to make them. It's so easy, super cheap. Eggs, favorite food, done.
Well, it's steak and eggs, right? You could have the
Yeah,
best of
yeah.
both,
There you
right?
go.
Favorite musician or band?
Rufus.
Favorite movie?
Favorite My Cousin Vinny.
Favorite book?
Favorite book. Um it's gonna be boring, but it's true. The Ascent of Money, Niall Ferguson.
Hmm. And I think you may have answered this, but when you're not working at Securitize, what are you doing for fun?
For fun, I live in Miami, so I love, love, love the beach. I love skiing. Um, and I would say I like Barry's boot camp.
Nice. Reid, absolute pleasure. Excited for the future updates around sTokens, and maybe we'll have to have you back on in the new year as there's further iterations of this project. But thank you so much for joining me.
Absolutely. Thanks, Tony. And we'll check back in and appreciate the invitation.